This is the World Financial Report podcast. My name is Randy Marshall. Joining us is our financial and diamond expert, Harold Siegel. We're taping on November 22nd, 2018. Our time is 8:06 a.m. Mountain. Happy U.S. Thanksgiving to all our American friends who listen to the podcast. One of the great things about Thanksgiving in the States, sure, it's the meal. Thanksgiving is huge in the United States, but also all the great football games that we get to watch throughout the entire day. The markets are closed in the United States. Black Friday tomorrow, Cyber Monday, obviously Monday. The markets will be open on Friday, but close early. Here in Canada, the markets will be open, but happy U.S. Thanksgiving. Grey Cup game here in Edmonton on Sunday afternoon. The Ottawa Red Blacks playing the Calgary Stampeders. Calgary, third year in the Grey Cup. They have lost 2 years in a row to Ottawa in 2016. Last year to Toronto. They're trying to win for the first time, but they are a very good team. There's no getting around it. They're sort of like the New England Patriots of the CFL, except New England wins in the big game. They just don't seem to do that in Calgary for some reason. They could have so many Grey Cups, but they always seem to choke. Let's run through the numbers here this morning. Obviously, U.S. markets are closed, as mentioned. U.S. dollar at 96.50. Canadian dollar, 75.59. The euro, 1.14. Pound, 128. Gold at $1,227.30. Silver at $14.48. Gold-silver ratio is 84.71. Platinum is $846. Palladium, $1,134. And it should be noted that gold and palladium are about $100 apart. Will we see parity? Time will tell. WTI 54.65, Brent 63.62, Nat gas 4.22, Bitcoin in the United States 4,469, Bitcoin in Canadian 5,509.75. Bitcoin has taken a little bit of a hit. The Dow is at 24,464, S&P 2649, NASDAQ 6,972, and the TSX is at 15,095. Our thoughts and prayers go out to those affected by the fires in California. Very, very serious. To lose everything and basically be out on the street, that is very, very difficult. One of the things that happened during the week, U.S. stock markets were very volatile, and there are some people that have lost major money. Facebook, Amazon, Apple, Netflix, and Google's parent company Alphabet lost more than $1 trillion in market value combined, wiping out all the 2018 gains. Amazon CEO Jeff Bezos has lost $42 billion since early September. This is according to Bloomberg's Billionaires Index. Facebook CEO Mark Zuckerberg, his net worth dropped $34 billion since July. Bill Gates and Warren Buffett have lost $5 million and $4 million respectively. But that is a lot of money to be wiped off the market, Harold. $1 trillion in market value for those FANG stocks. And there could be more to come in the days, weeks ahead, because this market seems to be very, very volatile.
You better believe it. It's amazing what uncertainty and higher interest rates do to a market. But, the fact is that the Dow's dropped about 2,000 points. Could drop substantially more, obviously. There's certainly situations in the market that could propel the losses. But let's not lose sight of the fact that this isn't like real estate or other markets like that. When the market makes a move up or down, somebody's making money on that side. So when we say that, the market lost, $1 trillion or $1 billion or whatever it's losing, somebody is making that on the other side. The market cannot go up or down without buyers and sellers. So obviously, the news that was coming out was negative, but somebody, whether it was a hedge fund or, a huge trader, whatever the situation is, was short those stocks and ended up making that kind of money. So anytime the market takes a huge drop, there's somebody else on the other side of that trade that's making that money. And the fact is that the market could substantially fall further. I doubt it will. The market will right the ship, but at this point, you're looking at about $20 trillion in debt for the United States at a time when interest rates are going up. That in itself creates a lot of uncertainty in the market and a lot of fear. But on top of that, you've got this scenario with China. the restrictions that the U.S. is putting on China is really going to affect the market moving forward, because so many U.S. companies, deal with China. And Trump can't sit there and individually pick out, what company can and what company can't. He may make certain allowances towards a company like, some of the major ones like Amazon. But the fact is that there are so many firms within the United States that depend on China, and these added tariffs are only going to cause and create additional problems. So again, I just don't see smooth sailing. But the fact is that the Dow has gone, from 6,500 to 26,500. It made a 20,000 point move basically in over a 10-year period without any type of real substantial pullback. A 2,000 point pullback is not substantial. The stocks that fell back are the stocks that moved up the most in value. So the fact is that we could see further corrections in the market, but there are definitely situations that could propel the losses further. I just don't think that's going to happen at this particular point. But there are derivatives in the market that are in the quadrillions of dollars that are unregulated that could hurt the market substantially. And if inflation continues to move higher and the Fed does continue to raise interest rates, that will certainly affect the markets moving forward.
Harold brought this story to us about a month or so ago, and there was an update from Bloomberg. I do want to talk about it because it is stunning. It's starting to get out there, the information on what Beijing wants to do. They want to judge every resident based on behavior by the end of 2020. China's plan to judge each of its 1.3 billion people based on their social behavior is moving a step closer to reality, with Beijing set to adopt a lifelong points program by 2021 that assigns personalized ratings for each resident. The capital city will pool data from several departments to reward and punish some 22 million citizens based on their actions and reputations by the end of 2020, according to a plan posted on the Beijing municipal government's website on Monday. Those with better so-called social credit will have green channel benefits, while those that violate laws will find life more difficult. The Beijing project will improve blacklist systems so those deemed unworthy will be unable to move even a single step, according to the government's plan. China has long experimented with systems that grade its citizens, rewarding good behavior with streamlined services while punishing bad actions with restrictions and penalties. Critics say such moves are fraught with risks and could lead to systems that reduce humans to little more than a report card. That story is something that shocked you, and you brought it to our attention a while back. It's stunning. They continue to move forward, and it is happening.
You bet. There's cameras on every single corner, and they're increasing the amount of cameras. And these cameras are very sensitive to not only pick up movement, but also pick up voice. And if certain key words are spoken, government, things like that, evidently it's highlighted, and the government will listen to that. And basically, your credit rating, the schools that your children go to, the type of travel that you can do, are all going to be affected by what type of citizen you are. And if you are not a good citizen, you may not be able to get on a plane or get on a train and leave the country in any way, shape, or form. So again, it's communism at work. They want to know everything that's going on. And I think it's a horrific situation, but it is happening. We read about it a while ago and we were disgusted by it. But the fact is, it's in full-fledged right now and going to continue. And I just hope that doesn't come to North America.
Another update for our podcast listeners. We promised we would mention it on the last podcast. There was a David Hockney painting that was for sale. It smashed auction records. It sold for $90 million. But here is the backstory, and that was at Christie's in New York last Thursday. In 1972, his New York dealer sold it for just $18,000. For Hockney, the memory is still bittersweet. He felt ripped off. Last year, at a studio in the Hollywood Hills, he told CNN, "I thought it was a lot of money at the time, but within 6 months, it was sold again for $50,000. After the sale, Hockney's American dealer, Andre Emmerich, realized the pictures in the show were underpriced. A lot had been underpriced. but by then it was too late. And so, as often the case in the art market, someone other than the artist made a swift and substantial profit. David Hockney painting going for the most in the history of art at $90 million. And as we joked on the last podcast, the painting actually looks pretty good. It's not some crazy esoteric thing that you can't understand. But isn't that amazing, Harold? We had the Patek Philippe watches going for $3.9, $3.2 million at auction last week. And now we have the update on the Hockney painting. $90 million. There are people moving into hard assets, and it does not surprise me when you see the stock market volatility.
Oh, you better believe it. And let's not lose sight of the fact that a $50 million diamond sold at the same time. But how in the world can you be in the art business, as an example, and undervalue something from 15,000 to 90 million? I mean, that just sounds ridiculous. How in the world could you? I mean, you've got to be the laughing stock of your business. I mean, that is unreal. But $90 million, obviously somebody who had, that kind of money, a multi-billionaire, would be able to buy that type of thing. But they don't buy it just because, hey, I love the look of that painting. It's something that will continue to increase in value, and he feels that he got a great deal and bought it at the right price. You can imagine the person that bought it for $15,000 and then for $50,000, how they feel at this particular point. That's an unbelievable number. So in all reality, the prices that hard assets are going for at this particular time are unprecedented. $90 million for a painting that nobody has ever really heard of before. Then on top of that, 3.9 and 3.2 million for Patek Philippe watches. I've got a couple Patek Philippe's, but I can assure you they're worth nowhere near that type of price. And then you got a $50 million diamond selling. You've got Marie Antoinette's diamond selling. You've got Marilyn Monroe's diamond selling. You've got those blues coming up to auction. I mean, this is an unbelievable time to be in the hard asset market. And the fact is, you're right, Randy. As the markets get more and more volatile and crazy, smart investors will take precautions, either put stop losses in your position or sell out in total, take your profit if you have it, and sit back and wait for the volatility to subside a bit. But most people will never do that. The smart money, the big money, the people that know what's happening, they're on the sidelines at this particular point, and they'll ease back into the market as it goes lower and lower, to try to buy for value. But at this particular point, there's just a lot of volatility in the paper asset markets, but look what hard assets are going for. I mean, it's unprecedented. It's just an unbelievable time to be in the diamond, art, and classic car market.
Really want to focus today on rare colored diamonds. Rarecoloreddiamonds.com is Harold's website. We're going to talk about that Winston Pink legacy here momentarily. In our free weekly newsletter, and get our free weekly newsletter, the companion to the podcast from Harold. We send it out via email every week, free of charge. And in the newsletter, we have Christie's Magnificent Jewel Sale, Geneva, November 13, 2018, auction results. Also, Sotheby's Magnificent Jewels and Noble Jewel Sale in Geneva, November 15th. We have auction results for that sale as well, and both auctions will be broken down further as we move ahead in the next few weeks. But as Harold touched on, Harry Winston last week pays a record price for a 19-carat pink diamond. It sold for $50.3 million. Diamond was 18.96 carats, and that brought in $2.65 million per carat, which is an auction record for a pink. They did rename it. Harold mentioned that on the last podcast. It's a fancy vivid pink diamond, the Winston Pink Legacy. And this diamond is one of the greatest diamonds to ever be shown or sold at auction. Harold, there is an article that we have in our free weekly newsletter. It is a must read, and it was put together by Christie's. 10 jewels that made history and changed the market. And they go through 10 different jewels, and 3 of them are colored diamonds. We've spoken about it before. Number 2 on the list, to remind people, the Hancock Red, a record-breaking wonder of nature. In April of 1987, Christie's offered a very small diamond weighing 0.95 carats as its top lot in New York. What made this diamond special was its color. fancy purple red. Only 1 in 100,000 diamonds qualifies as a fancy color. These odds lengthen exponentially for reds, which are so rare that experienced diamond dealers would consider themselves extremely lucky to handle more than 3 in the course of a lifetime. This .95 carat, which is 0.19 grams, wonder of nature, was part of the collection of Mr. Hancock, a farmer from Montana, who is rumored to have purchased the diamond for $13,500 in 1956. The Hancock red was offered for sale in 87 with an estimate of $100,000 to $150,000. It sold for a remarkable $880,000 or $926,000 per carat and broke all records in the process. They talk about the Oppenheimer blue. They talk about the Winston pink in this article. Get our newsletter, read that information. Harold, that Hancock red is legendary in the fancy colored diamond, rare colored diamond industry because it was one of the early indicators of where this market was going to go in the future.
You bet. And a fascinating story because he was a collector, but he bought the diamonds not knowing, that a red diamond would ever fetch that type of money. But he actually got in a lot of trouble with his wife. She was down on him for spending money on that particular diamond. He paid next to nothing for it. And when it did finally go to auction, it sold for close to $1 million. Today, that diamond is valued. It has no value. I mean, it's they can't put a value on it because of the history of it. But, a 1 carat purplish red, you don't see intense reds. You don't see vivid reds. In fact, you hardly ever see a red. The largest red diamond ever cut was 5 carats. So you're not talking about a large diamond. I've been very fortunate in my career to have sold 5 red diamonds, owned one of them myself. They're just spectacular. Most people would never even know that a red diamond exists because there's so few of them in the world. Now, when you look at a dollar per dollar, blue diamonds and pink diamonds sell for more, depending on the actual diamond. I mean, vivid blue diamonds of size and that type of thing, can go for $5 million a carat. But very seldom will you ever see a single red diamond ever come up for auction. That's how rare they are. That Hancock red was a beauty, and the story behind it just brings a smile to your face.
Speak with Harold about Rare Colored Diamonds, his website, rarecoloreddiamonds.com. We're going to talk about the Argyle Pink Diamond tender. It happened back in October. That's when the cutoff was. We received news that it was another massive success. To give you an idea, there were 55 carats offered in the collection. They don't give out prices, but they did disclose the tender reached double-digit price growth. Rare colored diamonds have been outdoing, in particular pink diamonds, outdoing the stock market. In this story, they mention a dealer out of Australia, and I thought it was interesting to mention because it just goes to show how coveted these diamonds are. Luciano Pavarotti bought a magnificent pink diamond when he was touring Australia. He wanted a little piece of Australia to take home with him. These diamonds are family heirlooms. It's like a piece of history in your hand, and it's something truly to be treasured. We know that the Argyle mine is going to be shutting down in 2020. They're saying that maybe 2 to 3 more tenders. We have that directly from Rio Tinto, and that is it. No more pink diamonds for the world. 90 to 95% of the pinks from Argyle feed the world, and that will be it. Harold, this is a major time for people to really take a look at pink diamonds and realize the end is near. If you're looking to invest, now is the time. When we hear about the tenders, 2 to 3 more reaching double-digit price growth, when these stop and the mine is shut down, I can't even imagine what some of these diamonds are going to be going for in the future.
No, judging by what has happened over the last few years with diamonds, I don't see any way that these diamonds don't go up substantially in value. I mean, first of all, 95% of all the diamonds that come out of the Argyle mine, they're going to be gone. So you're talking that maybe once every 5 or 10 years, a pink diamond will be discovered. So I just think it's a phenomenal investment. They're not huge diamonds. Argyle pink diamonds, I mean, to get one that's a carat is a really, really big deal. 95% of them are under a quarter carat. And those are known as the most concentrated form of wealth on earth. Something that small could be that valuable. But if you held one in your hand, if you saw what they looked like, you could certainly appreciate the beauty of Mother Nature, how gorgeous these diamonds are. And even though they're smaller, they're cut, whether they're round cuts or emerald cuts or square cuts or pear shapes or whatever, these are the most beautiful diamonds you could ever imagine. And when you put them into a piece of jewelry, it not only enhances the beauty of the diamond, but it also can enhance the value, making it even more amazing to sell down the road. So many of my clients own Argyle pink diamonds. We bought them over the last 10 or 12 years. We put them away. It's only 2 years or a year and a half till the mine closes down. Give it another couple of years for all the diamonds to run out. And we believe that those Argyle pinks are going to be amongst the best investments that we've ever made. So we're very excited what's happening in the diamond market. But, judging by the last Argyle tender, and there's only going to be a couple more, the prices of these diamonds are just skyrocketing in price. And it's great to see that this is something that we brought to our clients when nobody else was even thinking about these as an investment.
Last week, we mentioned Marie Antoinette. I found another story, and the backstory on her jewels is phenomenal. So to remind you again, Sotheby's sold Bourbon Parma family's jewels. They were selling the Marie Antoinette Special Pearl, owned by Queen Marie Antoinette. It broke the world record for a natural pearl sold at auction, going for $36.2 million. Now, here is the backstory. Prior to her being taken captive and later beheaded, Marie Antoinette had wrapped her jewel pearls, diamonds and rubies in cotton and sent them along with some clothes in a trunk to Brussels. They then traveled to Vienna, where the Austrian emperor was Marie Antoinette's nephew. He returned them to the Queen's daughter, Madame Royale, in 1795, and then passed into the Bourbon Parma family, which put them up for sale at Sotheby's auction. Love the backstory on that. That is simply amazing. Harold, if you bought that pearl, the backstory and the story you could tell people as you wore it or had people look at it in some special display is simply priceless.
You bet. It's just like the stories that you hear on these older, magnificent diamonds like that we brought up in the past. The provenance on some of these pieces. Again, you've got Marie Antoinette from the 1700s, her pieces being sold at auction. I mean, that's just, you can't get better than that. You've got Marilyn Monroe's pieces. You've had Elizabeth Taylor's pieces. And all of these pieces have gone for absolute fortunes. So it's just great to see. I'm very, very pleased to see that the public can, and certain investors can really fall in love with the beauty and the provenance of these magnificent collectibles.
As we get down towards the end of the podcast, it's Thanksgiving in the United States. Millennials apparently want smaller turkeys for Thanksgiving, and it's driving down demand for larger birds, according to Bloomberg. Industry experts say this is because millennials want to cut down on waste and be more socially responsible. The average U.S. household has shrunk in the past few decades, which makes smaller birds a more suitable choice. But my guess is, at the Siegel household, no way are we having a small bird. I'm sure, Harold, you're going to have a very nice, big, juicy turkey, right?
You better believe it. We have a beautiful turkey and a beautiful second turkey, like a breast type of thing. But my wife has always made a phenomenal Thanksgiving. That's my favorite day of the year. And it's going to be a great one. And those that want to eat a smaller turkey, well, they won't have any leftovers for the next day. I was out for dinner the other night with some people that the wife had never heard, believe it or not, of pink diamonds. So when I brought up a $50 million pink and pulled it up on my phone and shown it to her, she just couldn't stop staring at it. You don't have to know an awful lot about it. You may say, who in the world would pay $50 million for a diamond? Anybody that had that type of money. When you see that in person and you know the history of it, it's something that you would definitely want to own. that was one of the most beautiful diamonds I've ever seen.
And you can see it in our free weekly newsletter. Get the newsletter. Find out more about Argyle Pink Diamonds from speaking with Harold. He has them. The website, rarecoloreddiamonds.com. So it is U.S. Thanksgiving today. The markets are closed in the United States. They'll be open tomorrow, closing early in Canada, just normal days. Black Friday, Cyber Monday. You'll have a lot of football on U.S. Thanksgiving. One thing I wanted to touch on, I know Harold, he loves golf, and they've really started to sort of hype it here in the last few days. Phil Mickelson versus Tiger Woods. They're going head to head. It's a pay-per-view. Phil Mickelson bet Tiger Woods $200,000 that he would birdie the first hole of the live pay-per-view match. They're going to be having bets all the way along for charity. Supposedly, the language will not be censored. As Phil was saying, it's FOMA, fear of missing out. Do not miss this. I noticed here in Canada, it's going to be $24.99. Down in the United States, it's $19.99. They'll be playing without a crowd around them. Harold, this is going to be a match for the ages.
You better believe it. I'm a huge Tiger and Phil fan. I do believe the Tiger will clean his clock. $200,000 for a birdie on the first hole. So they're getting $9 million winner take all. But you can imagine that when they divide up the pay-per-view, they're probably each going to walk away with another 50 at least. So it's going to be interesting. I'm hoping Tiger's going to win. You see, Phil is a big, big gambler, which really shocks me that a guy that makes $50 million a year like he does in, as a golfer and in endorsement and things, he's a known heavy gambler, and so is his wife. In fact, there's stories that Phil has lost so much money gambling that there was a story that he was in Las Vegas. He lost $10 million at the table. He didn't have the money. He called up Callaway and said, if you want me to switch from my present clubs to Callaway clubs, get a $10 million check down here immediately. And that's what they did. And that's when Phil, switched clubs. So he lost $10 million, and it was Phil who had to switch to a different manufacturer in order to pay. Another scenario with Phil was that he was playing one day at Augusta, where they play the Masters golf tournament. And Phil was playing with some of the good old boys there, and Phil lost $100,000 to some of the guys there. When they went to collect at the end of the day, he said, listen, people pay a fortune to play golf with me. I'm not paying. And then Hootie Johnson, who was the chairman of Augusta and of the Masters, came up to Phil and pulled him aside and said, listen, pal, you don't pay the boys, you never play here again. So Phil is a notorious gambler. I'm sure the gambling is going to be substantial, but the banter and the fun and everything, Tiger's a different person today. He's not the stuck-up person that was so untouchable, years and years ago. This is a guy that's embraced the fans again, is so happy for a second life in golf and health and things like that. I admire him. And I hope he does great, not only in this tournament coming up Friday, but for the rest of his career.
Looking forward to it. It is Friday, and in the Mountain Time Zone, it's 1 p.m. until 7 p.m. Harold, I wish you and your family a happy U.S. Thanksgiving. Have an outstanding day and meal.
Thank you very, very much, Randy, and I wish everybody a wonderful weekend and a very profitable day.
To those in Canada who are going to be watching the Grey Cup game Sunday afternoon from the Brickfield at Commonwealth Stadium here in good old Edmonton. Unfortunately, the Eskimos are not in the game. We didn't make the playoffs. Let's not even go there. But it's going to be the Ottawa Red Blacks. They used to be the Rough Riders, Harold. Remember back in the good old days?
Yeah, when did they change to
they came back into
the Rough Riders?
That's right. They came back into the league. They left the league. They came back into the league, and they said, no, we don't want two Rough Riders again. So they had to change
so Saskatchewan is still the Rough Riders, too.
Yeah, Saskatchewan's still the Rough Riders, but Ottawa had to change their name to the Red Blacks. Ottawa Red Blacks, Calgary Stampeders. Last 3 years in a row, Calgary's been in there. They lost to Ottawa in 2016. They lost to Toronto last year. They're hoping to break the curse this year against Ottawa. Harold asked a very important question prior to the podcast starting. So for those in Alberta that are not Calgary fans, Will they be cheering for Calgary? No, we will not. Anybody but Calgary. I'm sorry to say that's the case, but I think anybody in Calgary or Edmonton knows that that is the rivalry between the two cities. The Grey Cup is always an outstanding game, so I'm looking forward to the game on Sunday afternoon. Happy U.S. Thanksgiving. Enjoy the Grey Cup. Connect with Harold at rarecoloreddiamonds.com. That's it. Another edition of the World Financial Report podcast. For Harold Siegel, my name is Randy Marshall. We will talk to you next week.